What's happening YouTube? What's good? It's your Markup here and welcome back to my YouTube channel. Today's video I'm going to walk you through DXY, and this is more like price playing out and follow-up of what price have been doing lately on DXY. If you're new on the channel, do well to hit the subscribe button and also do well to hit the notification bell so that whenever I post you get notified. And also, if you've been liking my content so far, please do well to hit the like button, because this will help me in getting this video out to other traders out there. You get me? So moving forward, and this is a chart on DXY, and my annotation is basically not here on the chart because still, I really love to analyze my charts naked like this. I don't really like having the moving averages, the indicators all pressed around on my page. I want to see the candlestick being printed, being documented live on the chart. So from the follow-up last week, we were emphasizing on this little gap here. It's quite not little because it's on the weekly time frame. So this gap here on the weekly time frame being traded into, and then also this liquidity that was run was sell stops and stop losses of orders that have been run here. So this liquidity that have been run here tapped into a fair value gap, and then we saw price rally higher. So I think last 2 weeks was when I did the analysis, or last 3 weeks or thereabout was when I did the analysis of DXY, that I wanted DXY to move to this, to grab this buy side liquidity here. I was expecting price to tap into this weekly fair value gap in here, and price did that, tapped into the weekly fair value gap, and then we saw price move higher to navigate towards this area here, this draw liquidity. Now what happened last week was that I was expecting this candle to grab buy side liquidity, but still I also had in mind of price consolidating around this area, or just giving a fake sell move before going to grab liquidity. Because remember, I told you, when price, this is one of the characteristics of higher time frame drawn liquidities or liquidity pools. When price is mostly close to a liquidity pool, like a significant liquidity pool like this, it's most likely going to fake traders in, the double top, traders in to think it's going to sell so that they can put their stop loss here. So they are trying to generate or engineer more liquidity in the market by doing this fake move here, so that traders will put their stop loss here and sell the market, and then they come in and take out price. So remember, just like I pointed out here, this sell side liquidity that was resting here, when price came, you can see that price literally didn't grab the liquidity with this week's candle. It also did this week. So it was 2 weeks of chaos in here, 2 weeks of indecision in here. Liquidity was not grabbed here. So it was the third week that liquidity actually got grabbed here with this candlestick before price rallied higher. So I think it's the same thing here. Price is just moving around, trying to fake traders in, hit people's stop losses around here, and also entice traders and their traders to place their stop loss here so that they can literally take price lower and then boom, grab their liquidity or something. You get me? So this is what been happening. But so far, while they're trying to bring price lower, you're not supposed to get distracted. They're supposed to look for PDRAs in this price leg of where price, you think price would bounce from. Here, as you can see on the daily time frame, this is the high. This is the high, this is that weekly high, and this is just price moving around 1, 2, 3, 4, 5, 6. We are in the 7th day now, expecting price to grab here. So what PDRA did I see here around this area that I think I feel we should push price higher to grab all this buy side liquidity, and still this particular buy side liquidity that we're targeting. So if you zoom in well to your chart, because you will always want to do this so you don't get to miss out on any information. If you zoom in well on your chart and then you come here, you would see that you see this gap here, you see these candlesticks overlapping here. So this is a volume imbalance. The volume imbalance is simply when you have a space between two candlesticks like this. So this is a volume imbalance, you understand? It's a market maker PDRA. It's a market maker point of interest. Market makers use this to send price higher or lower. So inside of this leg, I saw this was the first one. Remember, I'm gathering information, I'm gathering evidences. This was the first one I saw. The second one I saw was this fair value gap in here. Remember, a space, you just want to see a space. So there is no fair value gap in here, you get me, because the wicks have literally covered. There is no space in here. But in here, you see a little space where the high of this candle and the low of this candle, in between this candle, remember the fair value gap is always formed on the middle candlestick. So that is the second candlestick. So in between here is the middle candlestick, you get me. So this is a fair value gap. This is a volume imbalance. And what else did I see? I marked out this order block in here. Two down close candles, bearish candles before the bullish move, breaking market structure. So after the this high has been violated here, you can consider this to be an OB, a bullish order block. Basically, some people say the last down close candle before the bullish move. I say, according to ICT, the bearish candlesticks before the bullish move. So even if it was 3 candlesticks here, so far it's just 2 bearish candles before this up move. I consider this one the opening here, body of the candlestick, mark that out. That will be your order block. So I have 3 PDRAs in here that might help me support price to take price higher. You see, price have been here, trying to move higher. So we're expecting price to use this PDRA that we find here and extend price higher. So that's what I saw on DXY, and I felt I should show you. All these days, you might be hitting SLs, stop losses, and all those things. Now, these are the days you need to know and need to understand that you will hit stop loss in this industry. In as much as you want to know when you want to enter your trade, you also expect to know when not to trade. You get me? They're also expected to know when not to trade. So this is just a messy scenario. So when you are trading this type of scenario here, you want to be using the 15-minute time frame. I'm saying this based on personal preferences. I just go to the 15-minute time frame and I trade without the bias, because right now there's no bias, you understand me? So I trade without a bias. I just wait for a run on liquidity and then look for my significant entry module, and then I enter the trade, you get me, until price starts delivering the way I want it, you get me? So this is what I've been seeing on DXY. This is what I saw on DXY. And if I'm to put in the annotation now, this is what I see. So this is the volume imbalance. This is the volume imbalance. And this is the fair value gap. And this is the order block. You can see how many times price is respecting this. Price came here today. I wanted to see this low. This previous week low. This is the previous week low that was made. And this is the previous week high that was made. So we are in this price range right now. So inside of this price range, if you take your feet to a measure from here to here, you can see that we are in discount. So we are supposed to be bullish right now because we are in discount of this week's high, previous week's high, and previous week's low. So we are inside of this price range now, and we are supposed to be bullish because we are below 50%, and that's discount array. So what I wanted to see was to see the previous week low being violated first. That's why I kept this array here. The previous week low being violated first before the rally higher. Remember, before any significant move upwards or before any bullish move, you want to see a run on sell stops, you want to see a run on sell side liquidity. So I wanted to see this previous week low being violated, you understand me, drop lower, being violated once more, then before price start going up. But regardless, we have a run on previous day low. So this is the previous day low. We have a run on previous day low. So this could be the driving force. Still, this is just me tape reading, you understand me. Remember how the week has been messy. So let's watch out and let's be guided on how price delivers. I would really love to see this previous week low being violated first But since the previous day low has been violated, this you can still start looking for your setup to push price higher. So that's it for the analysis on DXY. Remember, sending analysis here on DXY so that you can use that to navigate EURUSD, AUDUSD, gold, anything you're trading. DXY is more like a universal indicator for all these forex pairs. You get me? So if you can understand the correlation between DXY and EURUSD, AUDUSD, you can understand whatever it is that I'm doing. So if DXY is actually bullish, that means you want EURUSD to be bearish, you want AUDUSD to be bearish, you want GBPUSD to be bearish at some point. So those are like the three pairs I trade. So this is how I use DXY to move up on my chart. I'd also trade NASDAQ, but I'm literally just back testing NASDAQ, and I'm just forward testing NASDAQ. So if you like this video, do well to subscribe, hit the notification button, and then smash the like button for me, please. Smash the like button for me. You need you to smash the like button for me. It's important so that the algorithm is going to just show up my videos to other traders. And also, if you're not on my YouTube channel, there's a link on the description below. Do well to click on the link and to follow my updates. Peace.